Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. I wanted to record this first live stream of the morning as we will be doing our daily financial news at 7. We'll be doing an hour of live Q&A at 8, and then I will be talking to my students at 9. So what I wanted to do here is I wanted to talk about Jerome Powell. I wanted to talk about what happened yesterday. I want to talk about kind of what happened before and what may or may not happen going forward. So first off, Jerome Powell, in my opinion, for the very first time, did what I wanted him to do. If you have been on my channel for probably 4 or 5 months, you have heard me on many occasions beg for Jerome Powell to get a backbone, to stop pussyfooting around, talking about this and that, and trying to treat the market gently. I believe what Jerome Powell had done the last 6 months or so is try to telegraph to quote unquote the market that rates are going up, get ready, position yourself. And when you tell someone what's coming, even if it's punishment, they get ready for it. They seek out ways to neutralize. And for the first time yesterday, in 8 minutes, I saw the interview 8 minutes. I actually thought somebody cut it up. So I went out and found other replays of it. It is all of 8 minutes, like 8 minutes and 20 seconds. This is what I took from the meeting, or took from the, meeting or teleconference or whatever you want to call it, is enough's enough. I'm going to speak clearly, succinctly, and you can choose to listen or not. That's what I think Powell said. In my opinion, what he actually said is he's going for 75 basis points in September. That will be the first test. I know there's a lot of people that say talk is cheap. I know there's a lot of people that say this and that. Well, good news. September 21st, we are going to have the very first decision point, kind of 3 short weeks away. And we're going to find out, is this just Powell talking tough and acting dovish, or will he come through? If you heard me talk about what I expected pre 8-minute presentation, I thought we would get 50 basis points, although I wanted, again, begged, prodded for 75. I am now going to sit here this Saturday morning and tell you he convinced me. I'm not really convinced. I'm kind of 60-40 convinced, but, I was 20-80 the other way before the 8 minutes. So, yeah, I'm going to sit here and think that we're going to get 75. And if we get 75 in September, I don't think the market's ready for it. I think that will be another sign that the Fed is in charge. So that is coming. The other thing I think is coming is I think we're going to end the year higher than I originally thought. I thought we would get to kind of 3.25, right? We would get 100 basis points between today and the end of the year, 50, 25, 25. Sitting here right now, thinking about it, talking to you live, I can't believe I'm going to do this. I now think we get 150. Play this out for me. 75, 50, 25. So that's going to take us from 2.25 to 3.75. That's crazy to think about. That's crazy. So what does this all mean? First off, it likely means at least until the September 21st test, buy the dip is probably not a good idea. Again, coming from a guy who owns 0 stock, so what do I know? But again, I think Powell was upset that his words were not being heard, right? You had heard me the last 2 months or so with all my stock market folks, Dan on Sunday and Taylor on Monday, basically going, what the heck is going on? The stock market believes this, the bond market believes that, one of them has to be wrong. Well, after yesterday's 1,000-point drop in the Dow, nearly 4% off the NASDAQ, I think it's fair to say that the bond market was right and the stock market was wrong. Now, of course, that could flip in a minute, but at least as of one day, Jerome Powell stepped up, kind of internalized Paul Volcker. Again, our first step is September 21st. The other big takeaway, again, Powell being clear, concise, is he won't repeat the mistakes of the early 80s. I actually went and looked them up. So Paul Volcker takes over in 1979. He jacks rates from like, I don't know what it was, like 9 to 18%. This is the federal funds rate. Inflation is at 14, I think, 14% or something. And then they get a couple of readings where inflation is coming off. Powell and his cronies thought they had it beat. I'm sorry, not Powell, my mistake. Volcker and his cronies thought they had it beat. They whacked the funds rate from 18 to 9. You can actually go and look at the Fed chart. It looks like a shark tooth. And what happened was inflation came back worse. So what I think you heard Powell say yesterday is not only are we going to raise faster and higher than the market thinks, we are going to stay there longer. I think that last piece, that longer piece, shocks the market, is a surprise. You and I have been talking about the Fed potentially pivoting in Q1. Cathie Wood is talking about the Fed pivoting in September. None of that is happening. None of this. Cathie Wood, some of your companies are going to go bust. They can't borrow money. Rates are going higher. Sorry, your companies are going to get sold for pennies. It's what happens. So what does all this mean for real estate? Well, I think I did a video the other day about my greatest fear. I think it's going to happen. I think it's going to happen. I think it's going to be 2 steps and it's going to be bad. Again, my thesis is the Federal Reserve broke the housing market, kept the rates too low for too long. We've created years and years of supplier destruction. We now have demand destruction. Those two are meeting in the middle to have a crash in transactions. I know lots of you don't like to hear it, but I called it and I was right. We've already had a 30% crash in transactions. And with what I heard Jerome Powell say yesterday, it's going to get worse. Housing is going to cause the recession. Jerome Powell said pain is coming. It is going to be led by housing, and it is going to be a recession. The housing market could really be in a depression. We are already down 30%, which I can call a crash. I think there's a very good chance that we go down 50%. This is how. With Powell's actions and higher rates, 2 things are certain. 1, affordability is going to get worse. Think about what I said earlier about the Fed funds rate going to 4%. What does that mean for the 10-year? What does that mean for the 30-year mortgage? It means they're both going higher, and I would argue substantially higher. So if we lost 18 million buyers at 6%, how many buyers do we lose at 7? I mean, seriously. Wow. We had affordability in Fresno, California. You and I did that video earlier in the week that was at a 31. That was with rates at 5.8. If rates go to 7, we could be at 25 or 24. The market is completely unaffordable. Then there's the sellers. And again, I think this is what all the other YouTube channels miss, but it's important. And I'm sorry if you don't like it, but it doesn't make it not true. If there were all these sellers who were frozen in place because they have a 3% mortgage and they were going to move up to a 6, what are they going to do at 7? They're not going anywhere. We are going to have a year, potentially a year and a half of just no transactions. Now, let's be clear. I'm not talking about 0. I'm talking about a 50% drop. We have already seen that July 20th date that I highlighted weeks ago become important. We've already seen a month or 6 weeks of fear of missing out from sellers. But I will do a video later in the day about Redfin. Redfin posted some crazy numbers yesterday. Inventory is already rolling over. As I shared with you earlier in the week, my greatest fear is we end the year with less inventory. And that's just because sellers aren't selling. Sellers are putting on at wish pricing. They're not getting the action they want. They're taking it off the market and staying put. This is a natural behavior. They have to live somewhere. And if they can't get their price, one option is to stay put. So I think we are heading for a significant crash in transactions. We are going to see that 50% because of higher rates, supply destruction, demand destruction. If you are in the real estate business, buckle up, Buttercup. It's going to feel like a depression. If you are an investor, please do the work. We are about to see more motivated sellers than any year except 2010 and 11. As I shared for the last 6 weeks or so, we were in a very noisy period where your buy box was probably popping off with inventory here and there. I believe as we get to the middle of September, so September 15th, we're going to see lots of cancellations, some expireds, and we're going to start to roll with less inventory, but the inventory that's out there probably is more motivated than normal. I'm going to keep fishing at 30 days on market in greater. Feel free to follow me. I would not look at first day listings. Let those go FHA, VA. We as investors want motivation. After September 15th, it should be a lot easier to find motivated sellers. Don't pay list price. Get closing cost credit. Get rate buy down. If you are not pulling every lever today to get the best deal possible, you are making a mistake. Buying from a motivated seller is awesome. I have done it for years. It is usually hard to do. As we get past September 15th, and then in October, and then in November, I believe between Thanksgiving and New Year's is going to be fun. Because who would want to sell their home between Thanksgiving and New Year's in an environment of 7% mortgages and no approved buyers? Only the truly motivated. I think it's going to be awesome. I am so excited for what's coming. I applaud Jerome Powell for finally stepping up. Talk is cheap. Words are cheap, but you have to start somewhere. Give the guy a break. I think we have a test in 3 weeks, about 3 weeks, September 21st. If he gives us 75 basis points, I think he's following through. So again, I think Powell did what he was supposed to do. He did what I was begging for. I'm very, very, I was happy yesterday. I was shocked. I got to tell you, first off, 8 minutes, really? Jerome Powell, 8-minute speech. Not what I expected. Clear, concise, not what I expected. I expected normal Fed speak. But yeah, he basically said, don't bet against the Fed. Buy the dip is dead. Mortgage rates are going higher. Housing market's going to crash. Transactions. It's going to be entertaining. All right, folks, I need to shut this down because I owe you a daily financial news at 7:30, and I want to get set up for that. Take care. Bye.